at HSBC. And Pranjul, hi, good morning. Thanks for your time. While the street is largely leaning towards the status quo, there is increasing chatter. We may see a 25 bips cut tomorrow and lots of uncertainty on that front. What do you think the outcome could look like tomorrow for our MPC?
Yeah, thank you very much for having me. Look, there's always an element of surprise going into any of these meetings that is possible. But our sense is that there's just so much of domestic and global uncertainty in the horizon right now that it'll be best for the RBI to basically go on a wait and watch mode, particularly because it eased so aggressively in the last policy meeting. Now, for example, if I look at global growth, a lot of changes are happening in the first half of the year. Hard data like GDP data, labor data actually held up pretty well for advanced economies, but the latest prints are showing weakness, and a lot of the survey data is also pointing at weakness. So I think we have to think about a changing global environment. Then if we look at India's GDP growth data, I think there is a lot of uncertainty out there. We've had this thesis that this year growth will move from the formal to the informal sector. Maybe the formal sector, the upper middle class will not do as well, but some of the informal sector, agriculture, small firms will do better because the crop has been good, inflation is falling. But then some data is falling, some is rising, and people are confused. When we look at June, July data, you mentioned IIT at a 10-year low. Many data points have come low. GST is low. We are wondering if June, July was a one-off because monsoons came earlier than expected and hampered construction activity, or is that the new normal, but we'll only know in a few months. So there are so many moving parts that I think it's best for the RBI to remain on hold at this point of time. I didn't even mention trade here. Maybe we can come back to that, but that is also a source of uncertainty at this point of time.
Yeah, absolutely it is, right? Perhaps that's why they front-loaded that 50 bips cut last time too. But, it's unfortunate, Pranjul, while there is no resolution still to tariffs, and especially with the developments last evening, pragmatic approach, but India is standing ground. But that aside, what do you think the RBI's commentary is going to be, because the scenario is still in so much flux?
Look, my sense is that, even after the last policy meeting, the governor has spoken publicly, he has given interviews, he has spoken in forums. And my sense is that, they will hold on to that narrative that they've done a lot for now. They're waiting for transmission, which is off to a good start. They know that inflation is very low this year, but they also know that 1 year ahead inflation is going to be higher than target. So therefore, they are just waiting and watching at this point of time. If and when there is a need for more rate cuts, they will do it. But they will first have to look for evidence that there is need for more rate cuts. And I think that is something that has come out very clearly from his interviews. And I think that is going to be the stance in this policy meeting as well, that we are opening to easing more, but we first need to get evidence that there is need for more easing at this point of time.
Pranjul, do you also feel that the previous cut, the sizable 50 bips, has also not been passed through fully yet? That also could be another reason why the RBI is going to hold still this time.
Yeah, absolutely. So I think there's been 100 basis points in rate cut. I think the first 50 basis points has been passed on, and I think the RBI governor also quoted this data in one of his interviews. But I think we still need to wait a little longer to see how and when the second 50 basis points gets transmitted as well. I want to sort of make this other point on transmission. We're happy that the first 50 basis points got transmitted, right? But it's not fair to say that every time the RBI cuts, the transmission will be as quick as the first 50 basis points were. Gradually it will get harder for the banks to transmit repo rate cuts into lower lending and deposit rates because they get competition from instruments like small saving rates. Beyond a point, they get scared to cut their deposit rate too much, because what will happen is that a lot of people will just go to small savings window and not come to banks. So we also have to be very careful there, like rate cuts help to a certain extent, but beyond a point, they don't help very much.
Okay, and also want to get a sense on what you think the commentary this time around could be from the RBI chair in terms of what the stance is going to be going ahead. We've just shifted stance last time from accommodative to neutral now. But given the kind of news flow we've received from overseas in terms of Trump, in terms of tariffs, do you think a stance change could be on the cards once again?
I don't think so, because only recently we've moved to a neutral trajectory. I don't think the RBI wants to be changing every policy meeting. So I think they'll hold on to neutral for now. But within that, my sense is that they will not sound hawkish. I think, if anything, they will reiterate that as and when the need arises, they can ease more. But they haven't got full evidence of that as yet, which I think is dovish commentary in a sort of a neutral environment. So I don't think they'll get too hawkish, but at the same time, I don't think they will change their stance in this policy meeting.
How do you think the RBI, other than, of course, that 50 bips rate cut, Pranjul, do you think they'll address the demand concerns? And will they really touch upon that, you think?
Well, I think they have been saying that, they are finding rural to be stronger than before, but they are nervous about how urban indicators are progressing. And they also seem to be, not very confident about investment pickup. And I think they'll reiterate that honestly, that some parts of the economy are doing better than other parts of the economy. And I think on the basis of that, they will make the case that, look, as and when the need comes, we will ease more. It's not that we are averse to easing more, but we need to see the evidence that that is really needed. I think the one indicator we might get is their forecast on inflation. Now, I don't think they'll change their forecast on growth, which at 6.5%, I think is all right, because we have too many uncertainties out there. But I think inflation, which has come much below they were expecting in the last couple of months, I think that they may bring down. So their FY26 inflation forecast is 3.7%. My sense is they will take it closer to about 3%. And I think through that, they will communicate to the market that they do think there is space if the need arises to ease more.
Okay, and also, Pranjul, want to discuss another macro point with you. Recently, the numbers on the IIP front, our industrial production front, have been absolutely lackluster. We're in fact at a multi-month low over there. While CPI is easing on the other side, you do have some demand concerns and some manufacturing production concerns on this front. How much do you think this could influence the policy this time?
Yeah, it's a great question that you asked. I must say, across all the manufacturing and construction indicators that we track, my sense is June and July have been rather weak. And this sort of, but at the same time, there are a few other things that are working to our favor. For example, all this monetary policy easing that has happened, liquidity is loose, rains have been good. At least so far, oil prices have been low. So, we have some backward-looking data that is weak, but then we have some forward-looking data that makes us believe that a few months down the line, things could improve from here, because transmission of monetary policy easing could impact demand, lower oil prices, high liquidity, better rains could also impact demand. So, I'm still sort of constructive about how things will start looking in the October to December quarter. But I agree with you that the current quarter is not looking very strong.
Okay, so that's the take. And of course, Pranjul, all eyes are going to be on our outcome tomorrow, and more importantly, the commentary that follows. Pranjul, on that note, we'll let you go. Thanks so much for your time.
Thank you for having me.
Well, we interacted with a whole host of experts on what they believe the policy outcome could look like. Let's go across and listen in to what they believe could be the outcome and the commentary that follows.